Okay. So this should be set up correctly. We'll see. I just wanted to quickly run through. It is June 16th. So I pulled these numbers over the weekend, last weekend. Most of these things haven't changed very much, but I know that Urban Digs puts out awesome, awesome information. And I think that matching up their data, which is citywide, and I can break it down when it's broken down in by the neighborhood. When I match their data with what I'm seeing on my end, with the few listings that we have, I think it gives me, and all of this information just kind of gives me some insight into making a more educated guess, and that is what most things over the short term are really educated guesses. And I have to caveat all of this is like, I don't have a crystal ball. I've been in this business now since 2017 ish. And really understanding this, trying to understand this at a deeper level. And this is what I see so far. And this is what guides my suggestions to clients. This is what guides my suggestions to friends. This is what guides my own thinking and my actions that I'm taking with my family. So, bigger picture, interest rates are high. In some places, double what they were in February. On top of that, nationwide inventory is up. Now, what's interesting about all of this stuff is that New York is typically behind so many things in like the real estate game that we don't have the same highs and the same lows that everywhere else will have because of how we're structured. But one thing that I wanted to keep in mind, and one thing that I'm constantly tracking, is the amount of supply that's in the market. And I think there's two perspectives to take. Is one, this number, and if you can see this on the screen, is starting to tick up. And I don't remember. This is probably, this is the bottom. So this is like in December-ish, the beginning of 2022. And this puts us just around last weekend in June. What you see is that when I zoom out, we are still well below all-time highs as far as inventory and supply is concerned. Now, one thing that's interesting here is in what's going to happen, and what I've seen happen already, is that this supply number is going to start to guide up. It's going to start to drift. How high it drifts, I'm not sure. Right now, we're at 6,500 listings total. This will drift. Now, year over year, when you look at that number, when I zoom out, I'm only at I'm actually down lower than I was this time last year. And I think there's an explanation for that, but it also gives us the understanding that it ain't so bad. We're not looking at, this is March, April, May, June of 2020, when supply was nearly 9,000. I think maybe even higher. It might even have been closer to 10. And then obviously we're not at the lows that we were at the beginning of the year. When I zoom out again, and I had particularly pulled this numbers from, because I have a lot of friends and family in sellers and owners in the West Village, clients was the word I was looking for. When I look at that supply at 95, it's 20% down from last year. So this really speaks to real estate is hyper local, and you're going to see this supply number pop up a lot when I look at Manhattan in general. So that is what's going to be reported in the New York Times. Nobody is dialing in and looking at, well, shoot, I only have 100 listings available in the entire West Village altogether, and that's 20%. So like this speaks to more of a supply limitations in the West Village than it does in Manhattan. But again, when I zoom out, I'm not way up here yet, and I'm still year over year down. And again, I have explanations for that, I think. So West Village, still a seller's market. I mean, and you look at this was trending down from the beginning. And this has been just so low since the pandemic started in here. And it's really only bounced off of like 50 listings. Urban Digs does some filtering of things that have been on the market for a long time, which I kind of like, but it doesn't give a true number exactly like everything that's available. But this is the stuff that hasn't been on for a really long time. They take the stale inventory out. So you see this West Village, like we're in this tranche, very similar to peak New York City, Manhattan real estate numbers, when from like 13 or 14 through right around here, which is, and I started over here, you were looking at under 100 supply. And we really didn't cross that number until we got into 2021 again. So you're looking at a buyer's market here. You're looking at a buyer's market. You're looking at very limited inventory. So if somebody, and this is a high demand neighborhood, if somebody's looking in the West Village and someone's thinking of selling and they're over it, or they want to buy something else or upgrade, it's a really still a great time to sell. And what's hard is that if the median listing price, if I could afford $1 million, can't necessarily afford it anymore with interest rates being where they are. So that should drive the prices down some, or at least drive some of the demand down. So when I look at this market pulse, this is a combination of that supply and demand number. And it creates, once I create a ratio here, you can see where we've been since 2021. And my marker in my brain was the 2020 election, which was right around in here, and we bottomed and we've run up as far as like the buyer's market. This was, the buy signal, and we have run up to a seller's market and been hovering at neutral or above for an extended period of time. This market pulse has come down a little bit. And again, the closer we get to, I think 0.6 is right around where this is neutral. So it's dropping. A drop here means it's going away from sellers. And it was much worse in here, or actually it was much worse in here. This is the beginning of the year because there just weren't a lot of listings. There wasn't a lot of supply. Then when you started adding supply in here, it drifts down and it'll drift back up. So moving forward through 2022, we probably will see this drift and go into this neutral territory. I don't think we drop below that. But if interest rates continue to stay high and continue to drift up, we're probably going to be in more of a buyer's market. So this, to me, again, speaks to it's probably a good time to sell to get ahead of this drifting down into neutral and into negative territory as a seller. Pending sales. So this pending sales number goes into that market pulse. You can see in all of Manhattan, this is one of the first real signs that we are going the other direction. We reverse some. Is that this pending sales number? If you remember, supply was actually down 6% relative to last year, whereas these pending sales are down 13%. So this is declining faster than the supply numbers are declining. Again, you look at like where this was in the pandemic. When you zoom out, we are still well above, even at this level or here, we are well above over the, versus the last 10 years. Still a really good place to be. It's still a fast moving market. And I think this speaks to sellers not wanting aspirational numbers, sellers not anchoring to what the past was, and being very cognizant of what really happened here. And, this is where their short-term memory is. When you were a seller at this point in time, which was early 2020 or even before, you were anchoring to what was happening back in these highs here, 2015, 2014, 2013. If you look at where those numbers were relative to where I started in this business, this was peak Manhattan. This was condos selling. This was a tremendous amount of new inventory coming on, and that's why you see these numbers bumping up against 4,000. The fact that we bottomed at 4 and bounced back almost to 5, and again, we'll probably trend down further and further. Ain't so bad. It's not. This isn't a market crash. It's not what's going to happen here. We just have too many things creating a floor. Too many people that want to buy that will make this bounce. And maybe we do cross over the 4,000 number. We're still pretty far off at 744. Pending sales in the West Village. Look at this. So this to me, again, speaks to the West Village being a seller's market, being a time to sell, that who knows how long this lasts. But when you look at the peaks here, this was probably 2021. Yep, peak 2021. And then we would have to go all the way back to 2015 when you had Greenwich Lane was coming on and a few other new developments. 275 West 10th might have been started to get sold here. This pending sales number, we haven't seen anything even over 100 for an extremely long time, and we've been hovering above 100 for a while. So these pending numbers are only down 3.7%. They're up over last month, up year to date. Great things are happening in the West Village. So this speaks to the West Village being so busy. And then again, this is now that market pulse, pending versus supply. We've been in a seller's market for an extremely long time here, looking at where we are, and we're well above. If you remember, Manhattan's at like 0.7 in that range. We're at 1.38 in the West Village. It's busy. It's busy, my West Village people. I know you may not want to, because obviously everybody wants to be where you are, but it's a great time to sell. I'm keeping one person in particular in mind, two people in particular. It's a great year. It's a great year for you. So if you want to capitalize on probably peak market, this is still a great time. So just keep that in mind. But one of the reasons that I think we're getting into, see if I can go back. One of the reasons I think that we haven't seen the worst of it yet, and I'll get to that here, is that when I look at this new supply, and this is new supply that comes on every week. So week over week pace down 14%, down 10% for the contract sign pace. But look at this off market number. This off market number is really telling. It's up 32% over last year. So you have more stuff coming off market in a week, or nearly the same amount as you do in the contract signed. When I go backwards, last year, tons of contracts being signed, not as much off market stuff. So yes, supply is down as far as what's coming on week over week, but this off market group, if I look at it even for the month, this off market group is going to be a concern for sellers when I want to put it back on at some point in time. If I assume that all of these sellers, the 719 sellers, want to sell their apartments, but they're taking them off, maybe some of them creep back up into the supply, but again, it's not making a difference. We're down 13, down 12%. But if these 719 people want to sell, they're going to put it on in fall. They're not going to put it back on. Maybe they've taken a break after a bit sitting for 90 days. They've heard the market is crazy, but now it's not. Maybe let's wait a minute. This is going to spell a problem for people that don't sell now and want to put it on in the fall. And if they anchor to what has happened the last 12 months, then they're going to be in a lot of trouble when the new people coming on have been hearing their agents tell them that things aren't great. And when I put it on in September, and these 719 come on in September, this market pulse changes quite a bit, and it's already down 4%, right? It's at 0.72, down 4% over the last month. But it's really what is happening here is that this 719 comes from this supply number. So the supply that's available is going up, but it's just not on the market yet. And that is what I want to make sure that's clear, is that yes, that market pulse is something I track a lot. It's deceiving when we have so much stuff coming off the market. And where is that stuff going? And when is that going to come back on? If I assume, again, even 50% of those people, 350, 360 people want to sell in September, they're going to show back up again, and that supply number is going to kick back up. So as far as sellers are concerned, still a great time to put it on the market. As far as buyers are concerned, maybe you wait a little bit. Maybe you take your time. You take your time to understand the market. You take your time to see listings to get a feel for what you want, and then you go at it in the fall. Maybe things have adjusted with interest rates. Maybe they're not 6%; they're down in the fives or down closer to 5.25%. Who knows? But that's something, an explanation as to where the market is, and I think that's something to keep in mind if you're on either side of the coin. If you're selling, still a great time to put it on. We haven't seen any signals that make me think that prices are going to drop in an extravagant way, but you will see more price reductions. We have seen more of those, and you will see more inventory come on. That's going to make things more competitive, which means people will take larger discounts, which means it's like prices will start to adjust then. Maybe not now, but they will. That's it for me for now. It's something that I will typically look into. If it's something that you need updates, you can reach me at the contact information below. If you want these on a regular basis and to be notified, click the notification bell and then click subscribe at the bottom. Click that little red button, and hopefully we can do some deals together at some point in time. Thank you so much. I'm Mike Baker from Compass. I'm out.